Good evening and welcome to tonight's webinar where we look at member-only content for ASX investment opportunities in review for 10th of May. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service. If you'd like to know more about it, please contact me on 1300 614 002. The technology we're using tonight is the members area. You can subscribe to it for $1,320 for the year. If you're joining us as part of your 30-day free trial and you'd like some additional guidance on how to set up your model portfolios or how to use the features, again, just contact me in the office number and happy to assist. The chart up on screen is the Nasdaq. The index has pulled back after forming a double top. It's below the 10-day moving average. The S&P 500 continues to move higher, but we are seeing some softness in that technology area, which is still reflective of maybe a little bit of build-up of concern in the market that, if anything, we're leaning towards higher interest rates as the economy continues to strengthen. We've seen a first sign of weakness in that theory on Friday night with a weak jobs number in the US. 10-year yields have tracked sideways at around 1.6%. It's important to continue to watch the Nasdaq as the leading indicator, and I'll just bring up a graph of that. We'll have a closer look at it. The relevance here is that the market, the index spent 3 or 4 days below that 10-day moving average. It's bounced back up. We're ready to retest it. Tonight will be a bit of a critical night as far as the technology sector goes to see whether we run into some level of resistance, and essentially whether it trades marginally above the average is probably not so much the important issue, but do we create a lower high formation where the index fails to continue breaking above these prior highs? So do we get a rollover pattern somewhere below this sort of 1400 level in the index? So that's what we'll be watching for, but for the moment we continue to remain on the bullish side of equities, and if we have a look at what that means for the ASX 100 and which stocks we're long, which ones we're cautious on, we get the percentage gainers to the top, organize it in buy, so we go through the stocks under buy conditions, then we look at the ones under sells. So this is the focus of the stocks in the portfolio at the moment. TPG under pressure on its lows, and we continue to monitor that. Fortescue, after creating a buy signal back here at around $15, we've seen it break out to a higher high, a higher low formation here off this interim pivot point, so which is the interim pivot point's a reference to the green arrow there. The stock price is above the 10-day average and moving higher, and we continue to stay exposed to Fortescue in the top 20 and top 50 model portfolios, and it's one of the better performing stocks. The strength in Fortescue is obviously off the back of iron ore prices pushing up through $200 US a ton at the moment. Star Entertainment, we've seen in the news there the potential for the takeover or merger with Crown Resorts. The big plus of that story is the cost synergies. Star's estimating that could be in excess of $2 billion in cost synergies over a number of years. Blackstone Group, which is the other entity looking at takeover offer with Crown. It will be interesting to see how that plays out as to ultimately who ends up getting the deal. I imagine the regulators are probably not against the idea of Star being the sole operator in Australia, but we're yet to see any commentary around that. Star, higher highs, higher lows, and performing well after the algorithm signal earlier this year. The gold stocks have been performing well again, so we're seeing gold back over 1800 US an ounce. Our preference still remains Northern Star. Evolution is under algorithm buy signals. It's performing well. ALS switched to buy conditions here at around $9, now pushing 11.20, 11.30. The momentum there continues to be strong. So this is one that I've commented on numerous times on the blog. The buy level on this was sub $10. It's now pushing 11.30. The correction that we've had from just say 11.60 down to this 10.50 is another buying opportunity. It looks like it's a higher low formation that's been put in place there. The stock price is above the average, so if you don't own Northern Star, I think now's the time to add it into portfolios. The setup there looks bullish. If you want to run stop losses, you could think about stops below that 1040 level. And I may even draw your attention to a derivative strategy on that tomorrow, as I did today with CIMIC Group. So you may have seen on the blog the suggestion around a call option as an alternative to being long the stock. So I'll do the same with Northern Star tomorrow. Alumina, under buy conditions, support there around 160, pushing 180. Blue Scope performing strong after that buy signal there at around $16, now pushing up towards 23. Linus, original switch from sell to buy condition here at around 230, now pushing up towards $6, higher low there at around 5. REA Group, I've shuffled the support line in fairly tight here on REA. We had a number of analysts upgrade their outlook here, but put in context, the stock's on 60 times earnings. Less than a 1% dividend yield. The stock's expensive, so yes, it has a great growth profile, but not much room for error there in that growth story. So I've shuffled the support up tight at around 150. A break below that, you might get a little bit more cautious on REA. Woolworths buy on the dip here at around this $39 was support. Upside, probably not a lot back above that 42 support, so it's one that you can buy on the dip and sell covered calls if it pushes back up towards that $42 level. But at 3% yield, Woolworths is still attractive at around just above that $40 level. Atlas Group supported around 550, now pushing $6. Afterpay under algorithm buy conditions, but it certainly is expensive. And the risks here that some investment banks have a price target of $30 on Afterpay, some have price targets of $150. So there's a wide disparity there in what is fair value. But what we do know is that for it to justify these current prices, the company has to essentially double in size over the next 2 to 3 years, and whether that's possible, creates some risk. So from our point of view, it sits at the higher end of the risk spectrum, but just highlighting that it is under current algorithm buy signals and support there just below $100. Downer EDI, we're comfortable with this name. We own it in portfolios. It's in the algorithm models. It's switched from sell conditions to buy conditions there at around $5, now pushing $5.70. Continue to like that. Preference CIMIC over Downer though. Charter Hall, real estate investment trust, switch from sell conditions to buy conditions, now pushing $15. As I mentioned in prior weeks, consideration is own SLF over the individual REITs. Cleanaway we like. We've been buyers of this off $2. We've taken profit now up here at around $3. It looks pretty close to full value to me. Stocklands, we've added a little more of this into portfolio, supported around that 450 level. We own it from lower levels here when the algorithm switched from sell conditions into buy, but added a little further exposure there to Stocklands just in the recent weeks. Zero, so under algorithm buy conditions, we have taken profit in our trading portfolios in this name. Still sits in the top 50 model portfolio after switching from sell conditions into buy. Stocks retrace from 150 back down to 136. Just keep an eye on this. You could watch this stochastic, maybe even watch for a pivot point to go from sell conditions into buy, and you may find there's a buy on the dip opportunity here in Zero, and I'll keep an eye on that and draw your attention to it on the blog. Beach Energy, after disappointing the market with production numbers and downgrades to reserves at one of their fields, we've seen the stock correct from 170 down to 125, starting to rebuild a little at the moment. Energy prices in general should be well supported. Our preference still remains sort of Woodside as our preferred exposure. But Beach there supported around 125. Goodman Group, analysts are upgrading their outlook here. The company's going to deliver double-digit earnings growth, between 10 to maybe 14% earnings growth, but it is looking expensive where it is at the moment, sub 2% dividend yield. The optimism here with Goodman Group is coming from the company doubling their development pipeline over, from where we were 12 months ago, which is helping analysts to continue to roll out that level of double digit earnings growth for the next 2 to 3 years, which supports higher prices than where we are today. But certainly the stock it is expensive, but the growth pipeline or development pipeline there looks very strong. ResMed, after a slight earnings miss, we've seen a correction from 28 back down to 25. Watch the stochastic here; it's starting to turn positive. We've got support there at around 24.50. You could certainly think about owning this with a stop below that 24.30, 24.40 level. The index continue to push higher today. CBA, our preferred banking exposure, continuing to do well after it switched from sell into buy conditions there at around 81, now pushing 95. Wesfarmers, we've had this small sell-off which we were looking for. It's created support there at around $53. I think Wesfarmers can push back up and maybe retest this $56 high. So pretty comfortable if you don't own it, thinking about adding it in on that small sell-off that we've just had over the last week or two. Mirvac, not doing there at the moment, but under buy signals, as is Sydney Airports is under buy. Aristocrat Leisure continues to perform well, but is getting a little expensive. Seek, struggle with the valuation there on Seek, so not a stock that we're too active in at the moment. Lendlease, this comes back onto the radar here at around $12. It's under algorithm buy conditions. It has the positive pivot point there and supported around that $12 level. So think about Lendlease and how that fits in with your portfolio. Computershare, support here at around this $13.60 level. Not looking for too much upside there in Computershare, but pretty comfortable with the latest trading update there that it supports the $13.50 share price. Woodside Petroleum, if you don't hold this, think about adding it in a portfolio. We think energy prices remain well supported. Cube Holdings, we've added this into portfolios. It's under algorithm buy conditions from late last year at around 250, now pushing 310. The correction that we had from 320 back down to 290, I've drawn your attention to the 290 support level on the blog. Stock now pushing 310, but comfortable. We think that has upside, maybe more into that 330 to 360 price range. Oil Search, consider that, but again, preference Woodside over Oil Search. Soul Pattinson now under buy conditions there, just at around that $30 level. JB Hi-Fi under algorithm buy conditions at $45, support there just below that. Challenger, under buy signals, but not really getting too excited about what we're seeing there on the fundamental earnings story. Aurora, we like this name. We just want to see it pull back and take another look at it on the next sort of significant sell-off. The company has seen a turnaround in the declining earnings trends. They are doing a share buyback. The stock's created a new high. Any pullback to sub $3 in a soft market, we're happy to take a look at that. Cochlear are under buy conditions at the moment. Support there at just above, sort of around that 210 level. Link Administration around $5, but not doing too much there at present. Domino's, we'll take a look at this on a more material pullback, but if we look at the history of the algorithm signal, we had the buy there at 73 and then the buy again there at around 85. GPT Group, again, think about SLF over GPT. Treasury Wines, a small allocation to Treasury in portfolios. I think it is a slightly higher risk proposition than some of the other names I've mentioned, but it's under algorithm buy conditions now at around $10, and think about adding a small amount of that into portfolios. As with Centre Group, surprisingly, the global property retail property trusts are actually doing quite well as part of the recovery trade. Centre Group, they do run a slightly higher level of leverage than I would like. So again, keep the position size relatively small if you're thinking about Centre Group there. WiseTech, not doing it there. Take a look at that if we see it deeper back down around 25. IDP under buy conditions, but it is expensive, so we're not doing too much there at present. Altium, we'll revisit this if we start to see it cross back above the 10-day average in the coming days or weeks. The stochastic looks like it's about to turn higher. But with tech stocks generally under pressure, I don't think there's any rush there. Qantas not doing there at present. Appen Group, we've seen earnings downgrades there. A2 Milk, we've seen earnings downgrades there as well, and I'll continue to update you on the blog. But we're actually sticking with A2 Milk for the time being, and there we are back to Crown. What we've done now is shift from stocks under buy conditions into stocks that are under sell conditions. So what you're seeing, and I'll just close in a bit more data here. These boxes up the top here, if you're joining us for the first time, are the algorithm sell signals. They're flagging the lower lows, lower highs. If we look at AMP, the last signal there at around 180, the stock now down at 112, but has poked its head back above that 10-day average. Rio, our preference is Fortescue over Rio, but in some cases we're still holding Rio as just general exposure to iron ore prices. Oz Minerals, we really like this company. We've been waiting for a pullback in the share price. We haven't seen it, but if we see a more material correction later this year, we'll certainly look to add Fortescue and Mineral Resources into portfolios. BHP, buy that on a dip. It is under sell conditions at the moment, whereas Fortescue's under buy. So Fortescue's our preferred holding, and BHP will look for a shift back to buy conditions later in the year. Newcrest under sell. Our preference there, therefore, is Northern Star over Newcrest at the moment. South 32, not doing there at the moment. Transurban, we're not doing anything there. IGO's under sell. Santos is under sell, so Woodside over Santos is a preference. Ampol should continue to push a little bit higher as part of the sort of recovery or the reopening trade, but generally what we're seeing here is a trend lower in Ampol. So if we go back, it was $40 4 or 5 years ago. We're now trading down into the mid 25, so just representing that lower low, lower high pattern. Reece under sell conditions, Reliance under sell. Reliance is likely to shift to buy conditions later this year. Westpac is under sell conditions. Our preference is CBA over Westpac. Tabcorp under sell. We're likely to see that switch to buy conditions later this year. NAB under sell conditions. We get a bit cautious on the banks if we were to see both the S&P and the Nasdaq below the 10-day average, but we're certainly not there at the moment. James Hardie under sell conditions, but that will switch to buy later this year, and we'll look to add that back into models. Bendigo under sell conditions, Worley under sell. Boral under sell, but will switch back to buy conditions later this year. Fisher and Paykel is now under sell. We've taken profit there. That's been one of the better performing stocks. Sonic Healthcare we've taken profit on. Suncorp is now under sell conditions, so that was removed from the model portfolio. Telstra is under sell conditions, but we're generally remaining or retaining the long exposure here with Telstra. What's driving that is the potential breakup of the business and the guidance from the company that clearly was quite optimistic. So we're thinking that Telstra, given the dividend yield, forward earnings growth and potential breakup valuation of Telstra, we're sticking with that trade as one of our counter trend trades. So a reference to counter trend meaning stocks that we're willing to buy or hold that are under algorithm sell conditions. Car sales, we've taken profit on this. It's rolled over, made lower lows, lower highs, and we've removed that from portfolios. Coles Group, under sell conditions. We haven't yet removed this from models, given that the trading update wasn't that long ago. And we're pretty comfortable that the market's still searching for income across names like consumer staples like Coles and Woolworths. But if you're trying to make a decision between the two, Woolworths is the preferred exposure at the moment. Origin Energy may be getting a little bit oversold. We want to see that momentum reverse higher before we jump on board that as a counter trend trade. QBE under sell conditions at the moment, AGL under sell. So if we just jump back to AGL, we can see there the cascading lower lows, lower highs, the algorithm sell signals. If we have a look at Spark Infrastructure under sell conditions, Nine Entertainment under sell but likely to shift buy later this year. Vicinity under sell, CSL. So this is one of those names where for the most part we've kept this in portfolios, but we just flagged that it is making lower lows and lower highs. It's rolled over from the 350 high down to 250 support, has rallied back. We've now got the interim sort of pivot point pointing down, and it's under sell signals here. Ideally what we would like to see is this structure flatten out a little bit in the price to actually break up, make new highs, pull back, create a higher low and a shift back to algorithm buy signals. The long-term story there for CSL remains extremely attractive, and you want to look to buy that either at these levels purely on valuation ground, or simply wait for a rally higher, a pullback, shift back to buy signals later in the year. Bank of Queensland under sell conditions, so not doing it there on the regionals, so again preference CBA over the regionals. Brambles, 5% earnings growth, a little over 2% dividend yield at $10.50. I don't think the downside risks substantial in Brambles, so you could continue to hold that. Magellan under sell signals there at around $50 as resistance, so we're not doing there. ASX now under sell conditions at around $72. Again, we're mindful that there's not much in the way of revenue growth here for ASX. But around that sort of 2 to 3% dividend yield, fully franked, $72 is about fair value. Think about selling call options over it to drive the extra cash flow if you're holding on to ASX. Medibank Private, not doing there at the moment, under resistance at around that $3. Ramsay's moved lower from that sell signal up at around $70, now back down to $63. Really see Ramsay tracking sideways, should find support at around that $60 and stay between that $60 to $70 price range. Ansell under sell conditions, so looking at overhead resistance at around $42. Orica under sell conditions, since that sell signal there at $17.50, the stock's continued to move lower. Dexus under sell, not doing there. Macquarie Group under sell. We will see this switch back to buy conditions on the next meaningful correction lower. If we were to see Macquarie pull back to around that 130, 140 level, I'd expect to see it switch to buy conditions, and we would be happy to add that into portfolios. Obviously, high quality business that's starting to see earnings exceed where it was pre-pandemic, by around about 10%. Additional earnings growth over and above the prior pandemic levels. AusNet Services resistance up at around 190, APA resistance at around that 1050. Insurance Australia Group, counter trend trade here. I've just put in resistance there at around 510. So for some trading accounts, we've bought it at around that 480. We've traded out at 510. But if we step back and look at the bigger picture here, Insurance Australia Group has the long term could trade back up to around this $7 to $8 range. So it does have the potential for it to be a meaningful counter trend trade. What we're looking for is ultimately the price to break above that 550 level, pull back, and then create a new uptrend, and we'd get a shift to algorithm buy conditions. But if you are looking for these counter trend trades and long-term recoveries, there's a couple that I've flagged. Obviously, CIMIC Group is one, and Insurance Australia Group is another there that you want to be keeping an eye on. Amcor, for the most part, we've continued to hold Amcor, given the earnings upgrade. The company's guided towards 11 to 14% earnings growth, which is above where the market was expecting. That's helped to drive the price from around $13.30 up to this $16 level. So traders could think about taking profit here and reallocating the money elsewhere. There's other opportunities in the market that probably present stronger price growth. But up here at around $16, if you're searching for income, you could continue to hold the stock and sell covered calls at around that 16.25 or 16.50 level to drive extra income. Next DC, as you would know if you've been watching the recordings over prior months, I'm a little cautious on this name and the fundamentals, or it was in particular the way the company report their earnings. Lower low, lower high pattern now in place, resistance at around $12. The pressure's likely to remain to the downside. That only reverses if we see the price action back through that $12 level. Horizon, cautious on that. ANZ was interesting out of the banking results that you've seen both ANZ and NAB underperform relative to the other banks, and in particular ANZ's off about 10%, NAB not quite as much, about 8% from its highs. Incitec pivot moving lower after plant-related issues, and there we are back to TPG. So just to look at a couple of the ETFs that I've been flagging on the blog, continue to like this Cure ETF, and we're accumulating that. IZZ is something to have a think about. We've traded out of the CNEW, which was the China New Economy ETF, and we've started building some exposure here in the IZZ as a broader index play. We are taking small positions in some of the Chinese internet companies, and I'll continue to update you on the blog regarding that. And maybe just to touch on a couple of US stocks if you're interested. I've kind of been including this in the prior week, so just if you want to make a note of these and maybe just have a look at the charts in your own time. So Biogen we like, so we've built a position in this one. Eli Lilly we like, so we've increased our exposure here. And these are stocks that sit in our Class B US fund. So if you'd like exposure to US stocks and you don't want to run the portfolio yourself, please give me a call and we can either talk about a US exposure inside Interactive Broker or a more simple structure through the Investor Signals Managed Fund. So Eli Lilly, a couple of the stocks that we're overweight in the fund that I've spoken about previously is Raytheon Group. So we've been overweight this, and it's one of the better performing stocks. It's traded up from around $55 to $85. And the other stock that's done extremely well in the fund is Berkshire Hathaway. So it switched from sell conditions there to buy conditions at around this 175 level. It's been in the fund since around this 200 support level, now pushing 290. So that's one of the recent signals. We've just added a very small exposure of Intel. We've seen this switch into algorithm buy conditions. Alibaba, something to have a think about there. We've started building a small position in that. Another biotech company in the US that we like is Gilead Sciences. It's under sell conditions, but we are starting to build that as a counter trend trade. And if you'd like more information on individual US stocks, and again please give me a call in the office to discuss that. A couple of stocks just to keep an eye on. They're a little bit too early, so I haven't drawn much attention to these on the blog yet, but just to highlight, let's just go through some of these names. The Asia Technology Tiger, just start thinking about that, but I think that's a little too early. I did comment on that on the blog last week. Bega Cheese, we've seen that correct, but I'd expect to see that generate a buy signal in the not too distant sort of future. Within maybe the next week or so, we should see Bega switch to buy conditions. Breville is now under buy conditions, so you might just add that one to your watch list. CIMIC, what I spoke about on the blog today was buying the $20 December calls. You're paying $1 for those call options, but it means that you're not risking any more than that dollar. And if we get to the end of the year and CIMIC's trading, at $24 or $25, you're making a substantial gain on your dollar investment. That call option's going to be worth $4 or $5. So in percentage terms from your for your dollar outlay, it's just an alternative to thinking about just buying the stock, buying a call option as a replacement. So again, if you'd like me to go through that with you over the phone, please give me a call in the office. The cloud computing ETF, we think that trades lower, so I'm not doing too much there. The CNU we traded out of in favour of the IVV. Coles we've covered. So this Cure ETF, we continue to buy that. Cleanaway have taken profit on. The video gaming ETF, we're leaving that for the moment. Gold Roads continues to perform well. This is up from 110 to now pushing 140. We continue to hold that. Rather than the iShares Asia 50, our focus is the IZZ. Insurance Australia Group, I covered that in detail tonight, but I think you want to make a note of that as a counter trend trade. Kogan, we haven't really done too much here in Kogan yet, but it's corrected a long way. We obviously saw the negativity a few weeks ago about the inventory build up, but we just continue to monitor the financial guidance that the company provides and analysing their balance sheet and their financial results before getting too aggressive on a positioning around Kogan. MVA is the Australian property ETF. I've spoken a lot about the SLF as the alternative, but similar exposure to REITs in Australia, but our preference is SLF. Newcrest we continue to hold. India we've avoided adding this at the moment. Aurora we've covered. So OZR was the resource ETF. I'll just jump into that. This switch from sell conditions to buy conditions here at around this $13, now pushing $14.50. So Pro Medicus is one of those examples that I referenced where I was saying that some of these stocks are not quite ready, but Pro Medicus has pulled back from its highs. It's a fabulous growth story within the medical space. Global company. We've owned it before, we've taken profit on it, and I'm watching closely for a pullback and a switch to algorithm buy signals there before we look to add Pro Medicus back in again. ResMed I covered, think about that at sort of that $24. Sims continues to do very well. Sunrise Energy Metals, high risk, but that's performed well off that 240, 230 support level. Venturex, which was the copper mine stock that I was telling you about a few weeks or months back. So this is where the CEO of Northern Star, after exiting post the Saracen merger, invested in Venturex, and looks like where he'll be dedicating his time. It's a copper mining opportunity in West Australia. The stock price has done very well. And Woodside, which I've covered, so that, as I mentioned earlier, it's our preference within the oil and gas space. So just to conclude this evening, I'll just remind you what we're looking at here on the Nasdaq. So we remain long equities, looking to from a risk management standpoint, just keeping an eye on the market's tolerance around continuing to effectively take sort of high risk speculative exposure in the market, and one of the leading indicators of that is obviously the pockets of overpriced areas in US tech, and therefore we watch that as our sort of catalyst, that if we were to see aggressive sell-off here and a trend building below the average or below that resistance there, that has implications for portfolio allocations. Thank you for listening in. I look forward to speaking again next week.